In this video, I'm going to be showing you the step-by-step guide on how to use the trailing stop-loss feature on Bybit. Now, just in case you don't know, this is a feature on Bybit and other crypto exchanges out there that will help you to lock in your profit. That is, it will help you to lock in some profit that you've made so that you don't lose those profits back into the market. It also helps you to limit your losses in the market. So if you are trading and you are trying to maybe limit the amount of money you want to lose or maybe reduce your losses, this is a feature you should know how to use. And number three is that it also helps you to remove any form of emotions from your decision making when you are trading, especially with futures trading. And also it helps you to balance your risk and your profit when you are trading, especially when it comes to risk management. So all of these are the things that you can do with trailing stop loss on Bybit and every other exchange. Now, I've also made a video about how to use this feature on Binance. So if you are using Binance, I'll put the link to that in the description below. So this one is for those who are using Bybit. And by the way, it is the same process on every other exchange out there. Now, let me go straight to the point. Now, how do you use the trailing stop loss feature on Bybit? Now, as you can see right here on the screen, I'm on the futures trading page. This is the demo trading page, which I want to use for this tutorial. So it is the same thing whether you are using a live account or a demo account. So it is the same thing. So right here is the futures trading page on Bybit. And if you want to go ahead and use the trailing stop loss feature, the first thing you need to do is to go ahead and take the trade. So I'll go ahead and take a trade right now, and then I'll show you how to use the trailing stop loss feature for that trade. Now, let me go on. Now, if you come here to this side, this right-hand side of the screen, this is where you have to take your trades. I'm sure you know that already. So let's just go ahead and take a trade. In case you don't know how to take a trade on the futures trading page on Bybit, I have a tutorial for that already. I will not be doing that in this video because of time. So if you want to learn that separately, there's a video for that. The link to that video will also be in the description below. So let's go straight to the point. So you want to take a trade on Bybit, the first thing you do, as you know, is you pick your margin right here. So you have isolated, cross, and portfolio. So let's say I want to pick isolated, you pick isolated right there. And also, in case you don't know the differences between isolated and cross, I also have a video on that. The link to that video will also be in the description below. Please make sure you watch all of these videos I'm talking about so that I can get to understand all of these things just in case you don't understand them before. And then next thing is to come here and pick your leverage. So you can see we have leverage 1x to 100x. So let's say I want to use 10x for my leverage right here. You pick 10x right there. And in case you also don't know how to use leverage, please, I have a separate video for that too. The link will be in the description below. I just want to go straight to the point and don't want to waste anyone's time in this video. And if you appreciate that, please like this video and subscribe to the YouTube channel. Thank you. Now, the next thing you want to do is to pick your order type between limit or market. These are the two popular ones. So I'll just pick market right here and go straight to the point. And then you come here to value and enter the amount you want to use to trade. So let's, for example, you want to use, let's say $1,000 to trade. The value you enter here is that $1,000 multiplied by your leverage. So in summary, what I'm trying to say is that the value you enter here is your capital. That is the amount you want to use as your capital. You multiply it by your leverage. And whatever you get is what you put here. So if I'm using $1,000 as my capital, I multiply it by 10, and that's $10,000. So that $10,000 is what you put right here. So I'll put $10,000 right there. So once you put that there, you also confirm, if you come here to where it says cost, you see that it is $1,010. So you are trading with approximately $1,000. So this is your capital. This cost right here is your capital that will be taken from your wallet for this trade. I hope you understand. So after you've done that, if you want to set your take profit as stop loss, you set it, but I'm not setting it because I want to use trailing stop loss. So once you've done that, just come here and pick long or short. So let's, for example, I want to long for this tutorial. I'll just click on long. And then you can see this pop-up right here that will make sure you confirm all of the details you have on the screen. So once you confirm everything, just click on confirm again. And just like that, you've taken the trade. So if I scroll up, you will see right here that I've taken the trade. This is the trade. It is running right now. Now, after the trade is running already, the next thing is now go ahead and set your trailing stop loss. Now, if I scroll to this right-hand side of the screen, you see where it says TP/SL, it says add. That means that I've not added my take profit or stop loss. So if I want to add it, I'll just click on add, but I'm not doing that. Now, if you come here, the next thing is where you have this trailing stop loss right there. Trailing stop loss, which is what I actually want to use. Now, if I go ahead and set it, what exactly is this trailing stop loss all about? Now, a trailing stop loss is a type of stop loss order that automatically changes as the price of that asset moves in your favor. So basically, instead of you setting like a fixed price level for your stop loss where you're going to take your loss, a trailing stop loss will actually follow the price by a particular distance or a particular percentage. I'll explain everything right now just in case you didn't understand what I've just said. So let me go straight and explain. That is why you have me. So to set your trailing stop loss, you come here and click on add right here. Before I go ahead and set this, let me set a fixed stop loss and show you what will happen. You set a fixed stop loss. And then I'll come back and set a trailing stop loss, and then I'll also show you what will happen when you set a trailing stop loss so that you can compare the two and know which one to start using from today. So let me set a fixed stop loss. So this is where you set your fixed stop loss. Just click on add. And then this is my stop loss right here. So let's, for example, for this trade, I want to put my stop loss at, let's say, $116,000, just for example. So $116,000 right there, and you see the percentage you'll be losing if it goes to that stop loss, which is 9.3%. So once you've set your stop loss, just click on confirm. So you can see on the chart right here, this is the chart on Bybit. So this point right here is the current price of the coin. So this green line here, that's the current price of the coin. And this red line is my stop loss. So you can see this is my stop loss, $116,000. Now, what does this mean? Now, let me bring out this brush icon and just use it to draw something on the screen. So you can see right now that the market is currently here. So let's assume that the market starts going up at this point. Maybe it comes down again, goes up again, comes down, just going up and down. And then it comes to your stop loss. Now, if it comes to your stop loss at this point right here, it means that you'll be losing a percentage of your money, which is about 9.3%, what we saw earlier. So you just go straight and lose a percentage of your money. That's just what this fixed stop loss is all about. But what if you now set a trailing stop loss? So let me come here. This is trailing stop. So let me set a trailing stop loss. So I'll just click on this add right here. Now, to set your trailing stop loss, you have two options. So you come here to where you have this by distance. If you click on it, you can set your trailing stop loss by distance, that's in USDT, or you set it by rate, that is in percentage. So let me set it by distance. I'll show you what it means, and I'll also set it by rate, which is percentage, and I'll also show you what it means. So let's start with by distance. I'll click on it and click on confirm. Now, by distance means that you want to set the difference between your current price and the stop loss. That's the meaning. You want to set it. So let's say, for example, I put $600 right there. Just for example, so let's say I put $600. So what this means is that every time the market is moving in my favor, that is, the market is moving up. Don't forget I'm longing. So if the market is moving up, it is moving in my favor. So again, anytime the market is moving in my favor, that is, it's moving up, the stop loss will also be moving up. And then the difference between the stop loss and the current price at each time will be $600. Let me explain what that means. So after you set it right there, just put confirm. Now, once you put confirm, you can see this is my stop loss right here. This is my stop loss for this trade right here. Now, this stop loss right here will be changing every time the market moves up. So let me show you right there. So let's say, for example, let me delete this one. Now, what this means is that as the market is moving up in my favor, don't forget I'm longing. So as it's moving up in my favor, this stop loss also from that point right here, it will also start moving up in the same direction until it gets to that same point. So every single time as it's moving up, every single time, the difference between the current price and the stop loss price will be $600. Right there, that's the meaning. So if you look at this point right here, the current price at this point is about $117,100. If you look at the stop loss, is about $116,550. The difference in that is just $600. If it gets to this point again, if the current price gets to this point again, this is about $117,900. If you look at the current stop loss now, that's $117,300. So right there, so you can see the difference will always be $600. Now, as the market is moving up, let's say after it got to this point right here, the market starts to come down. If it starts to come down right here, this stop loss will not come down. The stop loss will continue to stay on that level that is stopped. It is stay on that level until the market starts moving up again. So if the market starts moving up again, this stop loss will also start moving up. That is exactly how it. So if you continue moving up, the stop loss will continue to move up. So let's assume that after it moved up to this point, maybe it starts to come down again. This stop loss will still stay on this level. So the stop loss only moves up when the market is moving up. If you are longing, don't forget. So if you are longing, the stop loss is only moving up when the market is moving up. But when the market is moving down, the stop loss will just stay on that position. So you only hit stop loss when this comes here like this. So if the market comes to now hit this point right here, that means you've hit your stop loss and you are out of the trade. But don't forget, at this point right here, you will be in profit because this was the point where you entered the trade. We entered the trade, around this point. If you look at the entry price right here, it is $117,092. But right here, you are exiting the trade at $117,600 right here. You can see it. So if you're exiting at this point, you are actually ending in profit. You have been caught out of the trade in profit. So that's the advantage of using trailing stop loss right there. But now imagine that you're not using this trailing stop loss. This is what will happen. From this point right here, maybe the market moves up a little bit and maybe the market starts coming down. If it comes down to hit this stop loss right here, you're out of the trade. Or if it was the original stop loss I set earlier, you are out of the trade right there. So you can see that using trailing stop loss helps you to keep your profit or lock in your profit, and it also helps you to limit your losses. Now, another scenario that this trailing stop loss can also help you is to limit your losses, because don't think that everything will happen in profit. Don't think that it will always end there. It can also end in losses, but it will help you to reduce your losses. That's the thing. So let me show you how it can help you to reduce your losses. So let me delete all of these lines on the chart. So I've deleted the lines on the chart. So you can see right here, this is the market. The market is still here. And this is the trailing stop loss I set. It is still $116,550. And don't forget, the difference between it is $600. So the market will still keep on moving up. That's the meaning. So how exactly will this trailing stop loss help you limit your losses? So to do that, let me use the brush again. So let's, for example, the market keep going up, like maybe gets up to this point. Don't forget the stop loss too. We also go up to that point. Now let's, for example, from this point, the market is not now going up again. Maybe the market starts coming down. Don't forget, this stop loss will not go down again. It will stay on this level. Now let's now assume that the market starts going back up again. Maybe it goes up to this level. Don't forget, the stop loss too will move up to that level. Now, if the market starts coming down, the stop loss will not go up again. It will just stay on that level. And if the market comes down to hit that stop loss at that point, it means that you exit the trade at this point. So if it comes to hit it at this point right here, you'll be cut out of the trade and you'll just be losing a little amount of money, a very small amount of money. That's what you're going to be losing. If you compare it to what you'll be losing here, at this point, you'll be losing even a big amount of money, because if it comes down to hit your stop loss at this point, you are losing a very big amount of money right here. But if you're using this trailing stop loss, even if it comes down to your loss, you'll be limiting your loss or reducing your loss. I hope you understand. So again, it helps you to lock in your profit. That is, when the market is moving in your favor, it can help you lock in a big amount of money as your profit. And when the market is maybe kind of going against you, it can help you limit your losses. So you can see right there why trailing stop loss is really, really good. So that's for the method of setting your trailing stop loss by distance. So you can see right here, the trailing stop loss, we set it by $600. So let me come back here and set it by percentage. So you click on this by distance and change it to by rate, which is by percentage. So if I click on confirm, you come here and set the percentage that will be the difference between the current price and the stop loss at each point. So for this percentage right here, let's say I put 0.5%. For the percentage I put it right here, it should not be too high. It should be like a very minimum amount of percentage. Let's say between 0% to like 1% or 2%. I think some exchanges will actually give you a range. Some exchanges will actually tell you not to put more than 2%. So for this one, let's say I want to use 0.5%. That means that every time the market is moving in my favor, the difference between the current market price and the stop loss will be 0.5%. That's just the meaning. So if you come here and then you click on confirm, right there, to show you where your stop loss will be. So this is my current stop loss right here. So that means that as the market is moving up in my favor, don't forget, only when the market is moving up in my favor, this stop loss will be moving up right here. And the difference between this price and this price will always be 0.5%. Don't forget, 0.5% right there. So if the market starts coming down again from this point, don't forget, the stop loss will not move up, it will stay. If the market moves up again, the stop loss will start moving up again. And then if the market starts coming down, the stop loss will not move again. It's come here, and maybe if it comes down, it will cut me out of the trade, and then I'll be out of the trade at this point right here. So you can see I'm closing the trade above the entry price right here. So it's just a little bit, but at least it's still some profit for me right there. So using trailing stop loss is really, really good. So you can set it by distance, which was the first one we did, by setting it by $600. It can be any amount that you want. And the second option is to set it by percentage, which is this one. So you can set it by any percentage. Now, if you are using this trailing stop loss for futures trading, by the time you are shorting, don't forget, for shorting, it means that the trailing stop loss will move in your favor when it is moving down. So if the current market price is moving down, that is, if the current price is moving down, that means that your stop loss will also be moving down in your favor. That's if you are shorting right there. So long is the opposite of shorting. Just take it as the opposite of everything I've just explained. So that's exactly how you can use trailing stop loss. Now, some of you might want to ask me that, can you use this for spot trading? Yes, you can use trailing stop loss for spot trading too. So if you want to use it for spot trading, just come right here to the top. Let me go to the spot trading page. So this is the spot trading page. I'll go there. So as you can see on the screen right here, I'm on the spot trading page. And for you to use the trailing stop, here's what you need to do. So you come here to this right hand side where you want to carry out your trade, and the first thing you want to do is to pick whether you want to buy or sell. Now to use the trailing stop, it is best to use when you are selling because you want to use it to limit your loss. So you must have probably bought a particular coin. Maybe you bought Bitcoin. We're using Bitcoin now. So maybe you just bought Bitcoin and maybe you want to use the trailing stop loss to limit your loss or to lock in some profit for yourself. That is when you use it. So you come to sell right here. So you want to use it to sell your crypto. So once you come here, you have the other type where you have limit market. And if you come here to this TP/SL, you see this drop down arrow. Just click on it. Now, once you click on it, you see TP/SL, conditional, OCO, trailing stop, iceberg, TWAP, and scaled order. So the one we need right now is trailing stop. So you click on trailing stop right there. And once you click on it, you see that you can set your trailing stop by percentage or by distance, just like the futures trading one. So you can see where you have the percentage right here. Beside it, you have a drop down arrow. Click on that drop down arrow, you see by percentage and by distance. So if you want to set it by percentage, you click on this first one. If you want to set it by distance, you click on this second one. So let's use by distance for this example. So I just click on OK right here. And then next thing to come here and put the distance. So let's say, for example, I want to set it by, let's say, $600. Just for example, $600. Don't forget, if the market is moving up in your direction, the stop loss will also be moving up in your direction. And the difference between the current price and the stop loss will always be $600 as long as the market is moving up in your favor. Don't forget. Just like how it is for futures trading, that's the same way it is for spot trading. And then next thing you want to do is to pick the quantity of BTC you want to sell. So you click on everything. If you want to sell all the BTC you have in your wallet, just click on 100% right there. And then when you have this activation price, you don't need it. Activation price means that you want to put a price at which you want the trailing stop to start, but you don't need it. I don't advise it. So once you untick that box, just click on sell at this bottom right here. And just like that, you have your trailing stop set already. So if you come under open orders right here, make sure you click on trailing stop. You must click on trailing stop. You see this trailing stop that you have set right now. Now, if you look at it right now, the current price of the coin is about $117,320 something dollars. And if you come down, you see that the trigger price, so this is the stop loss right here. The trailing stop loss you just set is $116,737. So the difference right here, this is $37. So the difference will always be $600. So in summary, let me come to the chart. So in summary right here, if the market is moving up in your favor, let me use the brush. If the market is moving up in your favor like this, the stop loss will also be moving up in your favor. So the stop loss will also be moving up in your favor. Don't forget to moving up. So the difference between the current price and the price of your stop loss will always be $600. So as the market is moving up like this, if the market now starts to come down, don't forget your stop loss will stay that same level. And maybe if the market starts going up again, your stop loss again start going up. And if the market maybe it starts coming down, your stop loss will stay on the same level until maybe it comes to hit it at this point right here. So it will exit you at this point. So you can see that you entered at this point, you're exiting at this point, even with a trailing stop loss. So you are locking in some profit for yourself. So it is the same way it works for futures trading. That's exactly how it works for spot trading. But for spot trading, don't forget it is best to use when you are selling the cryptocurrency. So you make sure you click on sell right here. So that's exactly how you use the trailing stop loss feature on Bybit for both futures trading and spot trading. Again, if you want to learn how to use the trailing stop loss for Binance, I have a separate video for that. The link to that video will be in the description below. Don't forget there are different reasons why you should be using the trailing stop loss. The first reason is that it helps you to lock in some profit for you. Number two is that it helps you to limit your losses. Don't forget that too. Number three is that it helps you to remove any form of emotions when you are making decisions. And lastly, it helps you to balance your risk and your profit in terms of risk management. I hope you understand all of these things I've explained. If you want to watch some of my Bybit tutorials, click on this playlist showing on your screen right here. And if you also want to learn how to do futures trading on Bybit, also click on the one showing on your left hand side. I will see you in the next video. Bye.